I now hand the conference over to Mr. Abhijit Mitra. Thank you, and over to you, sir.
Yeah, thanks, operator, and good evening to all the participants, and thanks for joining in to discuss Q4FY21 results conference call of TCI Express. We have with us from the management team, Mr. Chandra Agarwal, MD, Mr. Pavitra Panda, COO, and Mr. Muktilal, CFO of the company. So without further ado, I hand it over to Mr. Chandra Agarwal for his opening remarks. Over to you, sir.
Thank you, Abhijit. Good evening, everyone, and welcome to the TCI Express Q4 Financial 21 earnings call. I hope you and your families are staying safe amidst the ongoing second wave of the pandemic, and of course, now the cyclone also. It is a very difficult time for many people across the country, and my personal thoughts go to all. Our earnings presentation has been uploaded on our website and stock exchange, and I hope you've had a chance to review it. We will start this call with a brief discussion on the industry, the company's performance, and then our CFO, Mr. Mukti, will present financial performance of the company. With all due consideration for the current situation in India today, we did see a normalization of economic and business activity during the last quarter. The growth momentum from the third quarter continued in the fourth quarter as we saw sequential recovery in key macro indicators. There was a strong recovery in the manufacturing sector as reflected in the IIP or the Index for Industrial Production, where key manufacturing industries registered a strong quarter as well for year-on-year growth. March 21 was the best month where our key customer industries such as auto, pharma, textiles registered a robust growth, thereby driving volumes. This trend was also visible in the e-way bills generation for Q4/21, which increased by 20% year-on-year and 13% quarter-on-quarter basis. With these market conditions, TCI Express delivered a strong quarterly performance in Q4 Financial 21. The company reported a total income of 280 crores, growth of about 18% on year-on-year and 6.6% on sequential basis. The sales were driven by increased business from both SME and corporate customers. We also delivered our highest quarterly EBITDA of 57 crores, and more than twice as compared to last year. Margin improvement was driven by improvement in both volumes and realizations. In addition, the company was able to pass select costs to the customers as we continue to see increase in fuel prices. Our asset light model has allowed us to maintain high capacity utilization, and various cost control measures adopted during the year has helped us deliver strong profitability. In light of strong performance in the second half of the year, the Board of Directors also recommended a quarterly dividend of 2 per share, taking fully a dividend of rupees 4 per share, with a payout of 200% on face value. During the year, we have opened 25 new branch offices as we continue to go deeper into our key geographies. The SME base is growing fast, and we remain committed to tap the growing business from these customers. We also incurred a Capex of 55 crores in 21, primarily towards construction of our 2 sorting centers. The Pune sorting center is complete, and we are waiting for the regulatory approvals, whereas Gurgaon sorting center is near completion. We are planning to first automate our Gurgaon center as it is closer to our corporate office and coordination, and we wanted to ensure full integration with the automation at the center under the supervision of the senior management. We will implement all the learnings and best practices while investing in automation at our Pune sorting center. I am proud of our employees who have shown great resilience and determination to ensure business continuity at all times, despite the ongoing pandemic challenges. For the continued support, management has decided to give an annual appraisal to its employees. We believe it's in double digits. We believe in creating an inclusive culture at workplace, and as a recognition, TCI Express has been recognized as a great place to work for a second year in a row. In the last 5 years, we've expanded our service offerings and scaled up our business to become a leading B2B express company in India. In terms of our operations, we have expanded our reach from 32,000 locations in financial year 2017 to 40,000 locations. Branch offices increased from 500 in financial year 27 to 800 plus branches, and the customer count increased from 1.6 lakhs to about approximately 2 lakhs in financial year 21. From financial performance perspective, the company has a 5-year track record, consistently delivering enhanced margins and profitability. EBITDA growing at a CAGR of 22.4% and net profit at a CAGR of 28%. We have consistently paid dividend and continue to attain high return on capital employed. TCI Express is a debt-free company, and we maintain a strong balance sheet and flexible capital structure to fund our future growth. Now, looking ahead, the company has a clear vision to expand its service offerings and create a niche for itself in new segments. I'm pleased to announce that we are expanding our service offerings, and we have recently launched 2 new value-added services called Cold Chain Express and C2C Express. Cold Chain Express, looking to cater to the growing demand from pharmaceutical and frozen food packaging companies. The second is C2C Express. We are India's first logistics company to launch customer-to-customer express service with the end-to-end transportation, door pickup and door delivery, multi-location pickup and delivery. Our modus operandi remains the same, that is, to have asset-light model and enter into new value-added segments. We have also appointed a separate team to manage these new business offerings, independent teams, and to ensure robust implementation of business plans in coming months. With clear strategic direction, TCI Express is well positioned to drive step-up growth in the coming years and create wealth for all our stakeholders. Now I would like to hand over the call to Mr. Mukti to discuss the financial performance of the quarter. Thank you. Handing over to you, Mr. Mukti.
Yeah. Thank you, Chandra sir, and good evening, everyone. And I will discuss key highlights of financial performance of the company. The momentum of sequential recovery in the business continued during the quarter. We saw a slight slowdown in February month. However, the demand saw a strong recovery back in the month of March 2021. And in Q4 to FY21, our revenue from operations stood at rupees 280 crore rupees and compared to 260 crore rupees in previous quarter and rupees 238 crore in the same period of last year. The company posted a quarter-on-quarter growth of 6.5% and a strong YoY growth of 18%. And we are now at around pre-COVID level. In absolute terms, EBITDA was 57 crore and we were able to deliver strong margin of 20% in Q4 compared to 18% in previous quarter and 12% in same period of last year. Improved EBITDA margins were due to increase in revenue driven by both SME and corporate customers. And second is higher operational efficiency due to cost control measure implemented by company in recent past, and also due to various digitalization initiatives introduced in processes and business. We also continue to maintain high capacity utilization among our fleets, which has further supported the margin level. And net profit of the company stood at rupees 43 crore with a margin of 15% in this quarter. On a full year basis, TCI Express delivered total income of 844 crore from operations, down by 18% compared to last year. However, EBITDA was up by 13% at rupees 142 crore with margin of 17%. Our company delivered a robust growth in profit after tax of 13% to first time cross 100 crore rupees. During the year, we continued our focus on enhancing margins and improving profitability through higher capacity utilization, implementing cost control measures, penetrating deep into the cities, and tapping into growing SME customers and efficient working capital management. We continue to generate strong cash flow, and for FY 2021, cash from operations stood at rupees 119 crore which increased almost by 47% on Y-on-Y basis. Overall, it is important to note that the business environment during the year, particularly first half, remained challenging with the economic slowdown, weaker industrial and manufacturing activity across sectors due to the pandemic. Despite these challenges, TCI Express has consistently delivered sequential improvement from Q1 FY onward and closed a year on a strong note. As we move in the FY 2020, we are optimistic about the growth prospects of our company with new service offering as explained by Mr. Chanda. And we will remain prudent and maintain financial discipline by focusing on efficient working capital management, strong cash flow conversion cycle, and robust collection from our customers. Thank you very much, and we can now open the floor for question and answer. Over to please. Yeah. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask any question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may please press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Vedic Sarkar from Unifi Capital. Please go ahead.
Chandra, good evening and congratulations again on the great set of numbers, and I hope your team is keeping well. This seems like consolidation at its core. A couple of questions. Just wanted to get a sense on the supply side. We're anecdotally seeing that all logistics networks have been kept busy the last couple of quarters, from roadways to air cargo traffic. What's your sense of what exactly is driving this trend, and how much of these volumes do you reckon are being driven by organic traction at the client's end vis-a-vis, the smaller and the unorganized players ceding market share?
Hi, Vedic. So I think it's been a very interesting scenario that has emerged last year. We saw the air cargo and the rail cargo really being utilized in a large way because, of course, there was shortage of truck drivers and all of the there were roadblocks and everything. There was the highways were not operational, but the airlines were operational. The trains were operational. So it was just a blip. I don't think it was something which changed the dynamics of the Indian logistics industry. So the trend still remains the same, robust as usual, that the roadways is going to be the preferred way of transportation in India, because ultimately the cost of roadways justifies our low cost economy. In terms of volume as well, if you talk about our volumes, I think we had a negative growth of about minus 21%. So that is something which came along because of the top line negative. Now, your third part was the supply from the trucks as usual. There wasn't so much of an issue there because we run on ourselves. Our operations run on the vendor management system, as you are aware. So and we don't really hire from the market. So that's one of the reasons why we were also able to keep our costs down.
Sure. So as we move on to the next fiscal, Chandra, are these margins at 19% defendable? Do we have additional levers in terms of moving to higher axle loads, perhaps pricing? Any thoughts on that? Margins going forward?
So we have to really balance out the axle load with the demand. So if you increase the axle load and the output has not really caught up to the levels of a regular economy, then there will be a serious mismatch. So we don't want to be in that situation. So we plan it as we go along. We do it bit by bit. We don't change the entire fleet to the high cube volume containers. So I think it's a wait and watch situation. We progress and we move along as the economy grows. And this is the biggest benefit of being asset light, as you're also aware.
So the key takeaway here is that, as you invest, margins, I mean, there is a probability that margins might come off in a subtle manner. I mean, should I keep that as a takeaway?
No, so margins, I don't think any reason for that to go down. Our quest is always to increase it, right? So, and we've been doing that. So I do not foresee any margins falling unless there's like a war or something, I don't know, with China or Pakistan or whatever. Otherwise, we've been battling all the ups and downs, typhoons, cyclones, virus, band, like everything that's possible on this planet happens in India. So, and we are, we kind of like ride that tide quite efficiently, unlike other companies. So we will be able to maintain, and I think hopefully 100% improve also.
Sure. And lastly, Chandra, has the current phase of lockdown impacted business a lot, or is it business as usual, especially the last 3 weeks of May? Any thoughts on how April and May have progressed for you guys?
So, it's a little difficult to say right now. It's very early. It's still the 17th, 19th, right? So in logistics, everything really picks up after the 21st. So we still have to wait and watch. I don't see it to be a great month, but of course it's going to be better than last year because last year there was zero business. So in terms of that, we will be in a better position, and profitability also will be in a better position.
Sure. And April, you reckon, was a regular month?
Oh yeah.
Okay, that's helpful, Chandra. I'll be in touch.
Thank you.
Thank you very much. We have a next question from the line of Ravi Naredi from Naredi Investments. Please go ahead.
Really, Chandra, you are doing wonderful to the company, as I am old shareholder of the company, and seeing you are working since last few years and how you wonderful doing the working for the company, and I am fortunate I am shareholder of your company. That is my pride. Now, our margin attainment is complete. What you think few years back, what is new plan or any hike in margin are in your mind? And secondly, in next 5 years, where you see the company in Capex terms or in business terms? That is my question.
Thank you, Surbhi. Thank you for your question. Nice to talk to you again. In terms of Capex, we will be investing another 400-500 crores once this tranche finishes. And we will be at least a 2,000 crore company in the next 4 years for sure, which means that our profit will be almost going up 4 times. So if our business doubles, then our profit will go 4 times. Is now, and business doubling is very easy in India, but to get that right business is what we are focusing on. That is why we have launched these new products also. In fact, as we go along the year, we'll be launching 2 more new products or 3 more new products, which I will talk about in H2. So I think these new products that we are doing are highly profitable. They have EBITDA of 20%, nothing less than that. And the way we are going to operate it, nobody else in India is doing that. So it will make its own charm. Everybody, then you'll see 20 other new startups coming up and wanting to do the same thing. So I think it will be a good progression as we go along.
Wonderful. And sir, this Capex of 400 to 500 crore in which segment?
So, we will be needing, we are doing these 2-3 sorting centers now. So we will also need to do in another 4 large ones in across India. So there we will be also doing automation in that. So there, for that we will be needing about 300 crores. And vaguely I'm giving you an idea. Exactly we'll come to when we finish Pune and Gurgaon is when we'll be able to give the right number. I think we have already purchased land in Chennai, and Calcutta also is also being finalized. So all these things, when we look at, will besides that, the other additional 100 crore will probably go in, like in IT, infra development, and possibly in advertising and all of that. So we need to start doing all the things that we have not been doing.
Okay. Really, all the best, sir. And
Thank
I'm
you.
fortunate I'm shareholder of your company, sir.
Thank you. We are fortunate also you're here with us.
Thank you very much. Participant, in the interest of time and fairness to all participants, please restrict your question to 2 per participant. If you still have more questions, please join the queue afresh. We have the next question from the line of Kaushal Shah from Dhanki Securities. Please go ahead.
Yeah, thank you very much, sir, and congratulations on the great performance. Sir, I had 2 questions. One was if you can share the fourth quarter as well as the full year volumes with us.
Yes, Mukti.
Yeah. So for the quarter, we have the volume of 230,000 ton, and for the whole year, we have the 7 lakh ton volume.
Okay, and I think if I'm not mistaken, in the last question, Chandar just mentioned that there was a 20% drop, is it, in the volumes?
Yeah. Yes, correct.
Okay, so this 7 lakh tons is for the full year?
Full year, yeah.
Sure. And Mukti sir, we also explained that there was some price increase, and even as we speak, virtually every second day or third day, we are seeing some increase in fuel costs. So, what is the price increase that we have taken, and do we plan to maybe take one more increase after?
Yeah, Chandra sir, you would like to answer on that?
No, go ahead, Mukti.
Yeah, please. So actually, you rightly said, nowadays is a daily phenomenon to increase the prices on diesel, and we've seen in a whole quarter there is a daily increase on that. And we, being a company, is fortunate and converted, taken as an opportunity and converted into as a positive arbitrage for us, as we have passed it on to our SME customers fully, and also my this to-be built customer, which is on credit, or big customers, almost 80% we have passed on to them. And another also, we had taken a price hikes from the all kind of customer over and above that. Yeah.
Right.
And if you see my our operating margins has been improved from even from quarter on quarter basis. And if you compare with the last year, we achieved around 29% operating margin, which has increased to 33.5%, which is highest one now.
Right. And the last question for Chandra sir. Sir, some thoughts on the SME side of the business also. I believe in your case more than 50% is SME. So
no, only 50.
Yeah. So any thoughts on how that particular segment is kind of tackling the second wave and
SMEs are rocking. There's no problem at all. In fact, if you see now also, when everything opens up, the first guys they're going to zoom up the economy are these SMEs in large way. Okay. So if you see, even the big automobile consumption has come down, FMCG has come down. In general, the industrial or the macro elements of the economy, they're coming down. Travel tourism is dead. So it's only the SME which is going to bounce back in a big way. They are flushed with cash. They're flushed with inventory. They want to just go out there and sell. Now, a lot of the SMEs have also opened in North India. So that has made a big difference. So we are seeing that there is no drop in number as such in a very large way as we had expected. So SMEs now going forward in June, they will be the litmus for super growth and profitability. So I have no qualms or challenges in their performance. In fact, our new branches also that we have planned, about approximately 100 this year, will be all centered around them only.
Okay. And if I can just squeeze one last question. So for the current year, apart from SME, any other segments which look promising, from a business perspective, and where the incremental volume growth can come for us?
I always like to have a very balanced approach, in the time of clientele group that we cater to. But I am seeing an uptake a little bit in the pharmaceuticals. It's fine. I mean, if people are consuming medicines, if that segment goes up, periodically by a percentage or two, there's no problem at all. So maybe in pharma, yes, I can say that this quarter we'll see a little bit more action happening. But later, when the sickness and the diseases, when they drive down, vaccination sets in, then maybe pharma will balance out. So that is something which is temporary.
Great. I'll join back in the queue, sir. Thank you.
Thank you very much. We have the next question from the line of Mukesh Sharaf from Spark Capital. Please go ahead.
Yes, sir, good evening, and thank you for the opportunity. So my question is, regarding the margins first up. So if you look at the EBITDA per ton, just simplistically dividing your EBITDA by the tonnage that you've done, in the fourth quarter we are at 2,360 rupees. This last year, this was around 1,400 odd rupees. So just trying to understand this 1,000 rupees jump in EBITDA per ton. What are the key drivers for this? So the fill factor, if I just go back to what you had mentioned last year, it was around 86%. So I guess this time also we are at around 86%. So just trying to understand what are all the drivers for that.
Mukti?
Yeah. So basic, we have improved almost 600 basis point. You rightly said we have almost improved 600 basis point EBITDA margin in this Q4. And that growth actually come from, 3-4 things come together. Like one is our, obviously utilization level, which has now touched to highest level of around 87% in this quarter. And second thing, we had taken a benefit of this, diesel fuel hike that actually plays as a vital role. And, this is also, we are able to pass on to our customers, and as is a positive arbitrage for us. Like we have managed to, pass on to slightly lower to my vendors and taking the full from my customers, or there is a gap of rate, what I have, pass it on to my vendor and what rate I have taken from the customer. And third thing, it is because cost on the last quarter was constant because for the employee cost and other fixed costs. And the fourth thing, revenue has sharply increased. So that has also benefited to us in terms of that. These are the 3-4 things coupled with allow us to, enhance this margin level. Yeah.
Okay. So just trying to understand the price hike bit. So you're saying that you have taken a hike over and above the diesel increase, right?
Yeah. So that actually what happened, we also, standardized that, mechanism to take the at least price hike from the each and every customer on annual basis over and above whatever fuel hike is there. That practice has actually now started and is working well in favor of company. So whenever whatever, contract is come for the renewal, we ask for a hike for that. So this is actually ongoing process for whole the year. It is not here that every contract is expiring in day one of the next year, or then we have to take the hike. No, it is all over roll over on the over the year. It is spread over the year. So whenever it comes for that, we have take the that hike. Yeah.
Right. So again, in continuation to this, I mean, historically there was in general a pricing gap between TCI Express and maybe some other premium service providers like Blue Dart. Do you see that gap to have narrowed down significantly now?
No. Actually, it is again increased because they have taken very big hike and from customers. They have taken advantage of this bad time. They raise their prices very high. That's why they're in a much profit, I think so.
Okay.
So we are not able to take that much high. Yes. Yeah.
Right. Okay, understood. And secondly is, on the Capex bit, and the plan was to spend 400 crores in 5 years. And I think so far in about 4 years, we have done just about 200 crores. So what's the plan, going ahead? Are we going to see one big year of Capex this year in FY22, or the plan has just got deferred to another 3 or 4 year block?
Not really. So whatever we have planned, that was in on timeline. And in this year we will be spend around 100 crore, and next year also same. And last year, yes, it's impacted due to that COVID. Everything has delayed actually.
Okay.
So now this will be certainly we will try to spend 100 crore rupees. And then next plan we will be chalk out once we will be finished this, like as Mr. Chandra has mentioned, we will be chalk out the next plan for the next 5 years, after 2 years.
Right. Okay. And just one last thing, for the full year FY21, what was the fill factor, sir? What was the load factor full year FY21?
86%.
Okay.
Yeah.
Right. Thank you, sir. I'll get back in the queue.
Thank you. Bye.
Thank you very much. A reminder to the participants, to ask a question, you may please press star and 1. We have the next question from the line of Deepesh from Equirus. Please go ahead.
Yeah, hi, sir. Thank you for taking my questions. So I just want to understand your new service offerings like cold chain, C2C, and I think you also started the Rail Express Logistics, right? So just want to understand that your group company TCI is already having this TCI cold chain subsidiary, and they also had a JV with Concor where they provide similar services. So if you can please highlight how your servicing and pricing are going to be different from the ones provided by TCI.
So we are actually an express company. So whatever we do has got an express element to it, which means that our EBITDA will not be less than 20%. So cold chain is going to be asset light. We are not going to be investing in any infrastructure or something. There is already we are doing vaccination transportation. We are doing UNICEF drugs and a whole bunch of other pharma company transportation that we're doing, where EBITDA is being maintained at 20%. Similarly, for rail cargo, we started in a small way last year because some of the clients wanted to, try that. Now, the difference between my other group company and this is that this company is trying to, which I don't want to talk about much now, just to give you an idea, it's going to be the middle path between air and road. That's all I can say now. I'll talk more about it in H2. So that space is totally empty in Express. So I'm just giving out my business plan, So anyway, so this is the basic difference, and we don't need any of that high volume business. We will get a good margin business, which will be long term and profitable.
And so the C2C Express, that basically means the full truckload from the customer to customer, right? So I just want to understand how the margins can be 20% in that kind of business where you don't have
Yeah. So that actually, that actually not the full truckload. This is a different kind of business where we can be picked for a customer from 3-4 location, and then also like multi-location pickup and multi-location delivery. So we will not involve our sorting center and branch network in that. And we will be directly delivered to customers' door.
So, if you heard of a terminology called milk run, so we have already started doing that in a big way across India, and that will emerge as the main C2C business.
Understood. So last question, Mukti sir, the average realization that is there in the fourth quarter is around 12,000 rupees, which is similar to the last quarter, right? So the price hikes that you're talking about, have you taken in like April, May, or like you have taken in the last quarter only?
Yeah, we taken in last quarter only. But sometimes because this is the average you are taking of that, but sometimes is what sector we have cater for that. So that is various things depend on that.
Yeah.
Understood.
Yeah.
Understood. Yeah. Thank you.
Thank you.
Thank you very much. We have the next question from the line of Preet from Wealth Financial Advisors. Please go ahead.
Yeah. So, Chandra, I want to ask further on the C2C business vertical that you spoke about. So, when you say that it will be customer to customer milk run kind of an offering, so will this be booked through a different portal? Will there be an app for it? Would it follow, this? Yeah. Sorry.
So we have, the beauty of this business is that we have 900 locations, right? 900 offices, where it gives us an options of 40,000 locations. So the client can actually demand from 40,000 locations to another in between that network wherever they want to send. So our branch offices coordinate with each other already. So last year we generated about 50 crore business in this.
Yeah.
Okay.
So this was like a trial thing, how we will set up and everything, and how we will be, how it has to be asset light. So all those things were tried and tested, and we ended up doing 50 crore business. So when we do it in a full focused way, then I think the potential is going to be massive. Now what happens is that some of the businesses, some of the customers, they may not have one full truck load for one location, but they'll have a half truck load for one location and the other half truck for the other location close by, or not too far away. So they want to send out their material this way, and our network is kind of like enabling them to do that. And this has turned out to be quite successful and taken out very well by the customers. This is very different from our C2C, the on-the-spot hiring model, because this is not really on-the-spot hiring. This is also through vendors. So in essence, we are developing a whole new ecosystem of this business which is non-existent.
Okay. So this is like similar to the regular couriers that are around us, where if we want to book something, we'll go and book a parcel and then they will take it forward.
No, then we have a TCI Express surface already doing that, right? Okay. But what TCI Express surface is doing, their customers are doing, is that they're sending it to multiple locations. Right. Small numbers. Here, we are looking at large numbers. The difference is that, customer is saying, want half a truck. So we don't need to send it to the sorting center then. So it itself creates its own, it creates a self-fulfilling prophecy of on time, and super fast and efficient, so that service is there. But the customer may not be wanting that fast service also, but it happens to happen because it's not going through the sorting center.
So where would this customer be doing that? So right now you're saying such a service isn't available.
So what happens is that this is happening all across the country.
Right. And how do they fulfill this? So they book it directly? Would a customer do this?
No, they book it through a branch office. No, our branch office is the main thing. They are the igniters, the fire igniter, for the customer. They are the ones that the customer can go to. So in essence, you need a branch network to really do this. This sort of model will be more visible when it gets a little bit of scale, probably in a year and a half time. Then automatically everyone will understand. This is like, within the Indian economy, there are so many facets of logistics that has not been covered. People always do the same thing, but they don't look deep, as I always do, like look deep, see where the money is, and then go for that. But in India, people like to just cut, copy, paste. And in that, they never end up making money. So here we have identified this new businesses and we will push forward.
Okay. So what kind of turnover do you think you can scale this up based on your trial run of last year, let's say 50 crore turnover?
See, I don't want to be too ambitious also, because for me, profitability is very important. So if I did 50 crore last year, even if I do 100 crore this year, should be okay, It's not, I'm not going to die for 500. But yes, in 5 years, this will become a 500 crore business very easily. There's no problem.
Thank you very much. We have a next question from the line of Colby Sen from Ambit Capital. Please go ahead.
Thank you for taking my question, sir. So the Capex which you are putting in the sorting centers for automation, this is, one of its kind, as I understand, in the B2B Express in India. So I wanted to know, are you catering to newer types of clients here, or, different kinds of express cargo compared to your previous model? Because as I understand, the turnaround time will be higher and you'll be able to process much more volume of standardized.
Turnaround time will be lesser, not higher.
sorry, turnaround time will be lesser. My bad for that. So it will be lesser. So are you catering or creating a new segment for customers in this case? And how is this different from your previous customer base?
Mukti?
Yeah. So, so this is actually, we are not changing the preference of that cargo actually. We just want to automate our existing processes at sorting center. Because right now, supposing my cargo is taking 15 hours as a idle time and, loading, unloading and then sorting as a manual process. We want to be cut to that at least 6 hours. And that actually, if you see, enhance my complete life cycle of particular sorting center and also reduce the truck, truck's turnaround time. So supposing one truck making in like 3 trip in a month, he maybe make like that truck maybe make 3.5 trip in a month. So that way we will be again able to cut my cost further. So to improve my efficiency, we are doing this, and also want to be cut the manual efforts also like labor and all. That is actually sometime on peak we face the big challenges like festival season and all. Volumes are very high and labor turnout is high that time, and so we face the challenges. We want to be cut that also, these challenges. And yes, it will be the showcase to in this Indian economy. We will be the first one to launch this product, this automation in kind of cargo we are handling.
Right. Sir, any sense on what the operational expenses, you've incurred around, if I'm not wrong, 25-30 crores for one sorting center. So what kind of operational expenses or IRR you are looking at from this kind of a project? When would it break even?
Yeah. So we have, if you see, there is no kind of, I think hardly any below 1% is the operational cost for these projects, which I have, we understood. And we will be going to operationalize this automation by Q3 of this year. And that is the thing.
So any idea on the IRR or the
IRR, we are looking for 6 years.
Okay.
Yeah.
So by 6 years, you think the Capex would reach its peak utilization level?
Yes.
Okay.
Must be.
Right.
Even we can be achieved earlier, but we as a, pessimistically we taken or we prudently we taken as a 6 year, though we are looking into for almost 4.5 years for that.
Understood. So my second question is...
Mr. Kamalpreet Singh, please come back in the queue.
Okay, all right, thank you.
Thank you. Participant, in the interest of time and fairness to all participants, please restrict your questions to per participant. The next question is from the line of Rahul Soni from SMIFS Limited. Please go ahead.
Hello.
Yeah.
Good evening, sir. Thanks for taking my question. Sir, one thing I wanted to understand how you arrive at this utilization in the logistics business. If you can give a broad picture on this.
You are talking about our this one truckload?
Yeah, utilization rate that you given.
So whatever, supposing we hire a truck of 11-ton truck and we are able to fill it up like 9 ton, that way we are making this 87% near to that. So supposing we have a capacity of 60,000 ton and we are utilizing like 50,000 out of here, because we are paying to our vendors as a per kilometer. So whatever capacity we have, this lies with us, and that is our risk or profit for us.
Okay. Sir, can you just provide this utilization rate for FY19-20 and the volumes also in tonnage?
So you please, can you give me a separate email? I will be provided on that.
Okay, sure. Sir, my second question is on your new business. Sir, what kind of business opportunity lies in this cold chain and C2C express business?
See, this is a very good question you asked. C2C business, if you look at it, if you look at the total FTL market in India, FTL, LTL combined, so there the element of express is missing. And that is where we want to focus on. FTL and LTL that is marketed in India, I think the the market size is I think maybe $200 billion or something, is all not time sensitive, is not really catering to the needs of the customer. It's a very haphazard kind of a business. So we will be that market size is there, that demand is there, and we will now fulfill it. Now, cold chain, let me tell you that initially in India, the market size may not be that big, but the way we will do it is that our only investment will be manpower, because we already have the offices, we already have the locations, we already have the IT network, we already have everything that is required. So the cost to get that business will be very less. To generate revenue will be almost nil. So ultimately, it will be a very highly profitable business because it's going to be asset light. So once we are able to achieve this, I think in 1 or 2 years you will see that the benefits are going to be coming in. It will be definitely visible.
Okay. So just one follow-up to this question. So what kind of competition will be there? Means it will be from or big organized players or unorganized players?
Unorganized, all unorganized. India is still, the situation right now is that there is so much of extra availability of vehicles because there isn't enough business. So that business, eventually, that customer that goes to that truck which is standing will want to move to a organized player. So ultimately, we'll be taking share from the unorganized and converting it into this new business without hampering the margins.
Sir, so have not we seen any consolidation even after the implementation of GST in 2007?
Market is too big, very hard to kind of see that visually. I'm sure it's happening. There are fallouts in the business, but it is not a governed where you need license or something. So truck owners come and go. So we don't really can actually ever gauge the market penetration or reduction or anything of that sort.
Thank you very much. We have a next question from the line of Manish Jain from an individual investor. Please go ahead.
Good evening, sir. Congratulations on good set of numbers. My question was regarding first on the volume. We share volume based on a tons. Is it possible to share based on a ton kilometers? First. Second question was regarding with all cargo now taking over Gati. Do we see any change in a competitive landscape? Thanks.
Yeah, first question I want to be answer on that. We are not calculating as per kilometer basis, per ton per kilometer. So we just giving the volume on that because it's across India is very dynamic. Because our you can take other way of round, like our travel per cargo is traveling at least 1,000 kilometer plus. So we are not working out per ton per kilometer. Yeah. And Chandra sir, you can reply on that. Another question.
The second part is, I think I'm not seeing, when you say that a company which does not know this business is taking over a business, then I don't know if I should be worried or I should be happy. So I think time will tell that.
Okay. Thank you, sir.
Thank you.
Thank you very much. The next question is from the line of Prateek Kumar from Antique Stock Broking. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Firstly, sir, on Capex, so we will be looking at 80 crore Capex if you are trying to do annual number in prior 2 years also. What would be our Capex number for this year?
This year we have the 55 crore rupees we incurred on Capex.
Yeah, I mean 22.
Yeah, 22 and 23 we will be spend 100 crore each. Yeah, in each year.
And the number of the capex number of 400 crore which we used to mention, that included automation capex, which was like we have talked about 50 crore additional capex on automation, which was mentioned in the presentation.
Yeah, this is included in this. Yeah, it is a part of 400 crore rupees.
Right. And sir, just on this C2C business, I just want to add one query. That is it some form of 3PL logistics, what like some of the 3PL logistics companies do? Is it similar to that? And also, some of the internet companies like IndiaMart or Just Dial are also looking for logistics partnerships.
No, we don't do any of that.
Okay. So
we have solid customers, we have known customers, we have GST paying customers, so we look at SMEs who are solid. We don't know level of transaction in those online things and all that. It's risky if they're not paying GST, if they don't have any of the papers in order, then we will be in trouble. So all that I cannot afford for the sake of our investors.
So, thank you very much. We have a next question from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah. Hello. Yeah, thank you very much, sir, for the opportunity. I just wanted to understand this FY22, what sort of volume tonnage that we are looking at, and is there any haircut or drag that you are looking at in terms of tonnage because of the second wave?
Yeah, Chandra sir,
Go ahead.
Yeah. So we are for the FY 2020, we are looking for a around 40% revenue growth, and with a kind of 35% volume growth on FY 2021. Yeah.
Sure. That's it from me. Thank you.
Yeah.
Thank you very much. The next question is from the line of Arjun, an individual investor. Please go ahead. Please go ahead with your question, Arjun.
Hi, sorry, I did not know it was me. Congratulations, sir, on a very good set of numbers. I had two questions. One, customers. You have roughly 2 lakh customers, and you've been able to pass on price increases throughout the year. That sounds like a very substantial number of customers to deal with. How are you able to manage all of this? Is the process electronically driven, or is it driven by different sales people managing this individually?
So it is basically, if you see, it is basically nowadays is electronically we are doing through emails and all, and my branch person is all branch are connected with the customer directly in a local level, and that connection actually done very well for us, and that's why, as Chandra sir has mentioned, we are able to connect with the customer directly, and we are able to get the more business from the SME customer, and that's why we need this big network for that.
So our CRM application is in-house, inbuilt, and it is mobile, and it is as well as localized, which is connected to the central server. So we have like all sorts of data which is possible regarding a customer, and we don't need to buy any fancy CRM software or something like that. So of course it is CRM controlled, and not now, not today. We are since 20 years. Most companies are doing computerization now, but we already been doing it since like 20 years.
Understood. But sir, when you propose a price change, right, and since it's a flow type of a business, right, customers tend to take their own time, right?
No, ऐसा नहीं है ना. We don't deal with those kind of customers.
Okay.
So yeah, we deal with like corporate, organized set of customers which they respond. They understand that the fuel is increasing.
Understood.
You look at a company which will impose their pricing, because road network was shut, so the other mode was active. But this year they will not be able to do that. So they will go back to where they were, where they started 2 years ago. So that sort of thing is there, but in our case, it doesn't happen. No? It's always, we are always improving Q on Q.
Thank you very much. We have the next question from the line of Shreyas Bukanwala from Canara Robeco Mutual Fund. Please go ahead.
Thanks for the opportunity, sir. Just two questions from mine. One was on the cold chain business. So you did mention on C2C, how has that been the contributor to the business? Can you help? Is it possible to share what has been the contribution from cold chain in this year? And how do you look at that business, say, 3 years down the line? What can probably be the kind of contribution then?
So, C2C, the cold chain business is something which, we just started with the vaccination movement. And we were doing that not because only because we have the offices everywhere, and we have that network of hub and spoke. So the vaccine suppliers and even like the buyers of the vaccine in large quantity, for example, UNICEF and all those NGOs, they had to use our service, and they realized that this sort of service is beneficial. So we have tied up with even government, I think at taluk level, where we are supplying the vaccines. So of course, as this is India, it is very unorganized. From the government, everything is haphazard. When things start becoming streamlined, not just for vaccine, but in general, for India will become a market for for vaccinations, going to the larger population earlier, which was missing. This will be a new opportunity, which I foresee. So medication which was not available going to the B towns, C towns, Marees Low coming to the big cities only, that will change after this pandemic. And for that, you will need cold chain, and especially express cold chain, where you will need to get the medicine quickly, deliver and leave. You don't need to store, you don't need to do anything. You'll be going for quick consumption and quick departure. So that sort of model will emerge for sure, because in a big way, because that we are already doing right now.
Sure, sir. Sure. And secondly, on the margin side, so on the gross margin levels, we are now on almost at 33%. So with probably, do we see further scope of improvement there over the next maybe 1 or 2 years with better mix or better utilization?
अभी तो volume तो kick in ही नहीं किया है. When volume kicks in, then you will see that margins improve much better. So when the economy improves, when the top line grows, the volumes, when the margins will start kicking in, then you'll see a robust jump. Next year we have solid plans. I mean, not next year, this year. We have solid plans for the financial year.
Sure. So basically, this kind of margins would be sustainable, the Q4 margins, what we have seen?
Yeah, Mukti?
Yeah, so you can't be compare on quarter on the each quarter in the same page. But yes, on next year again, our target is to always to improve the at least 100%, 100 basis point in each year. Certainly, we will be improved on yearly basis. We will be improve 100 basis point.
Sure.
That is actually our target. Like in last year we taken to improve 100 basis point, but we have improved like 500 basis point. So that is in a different task always, because we had taken opportunity in this this pandemic time and improve the margin. So now we again take a big leap, and again for the yearly basis, our next target is to 20%.
Sure, 20% by 23.
Yeah.
Sure. Thank you. That answers my question.
Yeah.
Thank you. We have the next question from the line of Aman Viz from Institute Investment Management. Please go ahead.
Yeah. Good evening, Chandra sir and Mukti sir. My first question is on the new players, the unlisted players. So, sir, some of them have turned profitable and have grown quite well during the pandemic. So, any views on the same? Are you seeing any competition increasing from them?
I'm not sure which unlisted player you're talking about turning profitable.
Sir, e-com express, although it's not like to like, but then delivery is also close to that. Then there's a spot on which have grown quite well over the last.
I don't think delivery is profitable by any means. They have thousands of crores of losses, right?
Yeah, so delivery is still loss making, but e-com express.
No, I'm not seeing 1-2 crore loss, but like thousands of crores of loss. So they will have to do another like 20-30,000 crore of business to cover that loss. Anyway, so yeah, I don't see any challenge over there. Spot on is been there since '96 because Spot on was called TNT earlier.
Yeah.
Then TNT was sold to Samara Capital. So they have not really dented any business. But what they have done is that they've captured the low end market, So which is okay, which is not a big concern for me. And to be really profitable in this business, you need to be organized, which these guys are not. I've also known that they do a lot of false claims to their investors and all of that to keep getting the money. Please don't quote me, but I think this is what I've heard. So very hard to talk about companies which are not listed and compare myself TCI Express to that, because we have a very strong foundation and we also have a very strong sense of organization, and our company is also like is in the forefront of that. So very hard for me to say about all these guys.
Sure, sir. My second question is on the margin. So, sir, 2-3 years back when we got we listed, we had that vision of 100 basis point each year, but we have done way better than what we had expected, and like Mukti sir is also talking about, 20% is now that sustainable number.
Yeah.
Sir, what has changed that has helped us even with volume drop, all those things? And you are also talking about this is like the new base, and you are right also, the volumes are still to come. This year we are targeting 30-40%. Obviously it's on a lower base. So what has led to this kind of 20% margins? Because anywhere in the world we have not seen these kind of margins in logistics companies.
Yeah. Mukti? Are you there, Mukti?
Yes, sir. I am there.
Yeah.
So, I was on mute actually. So, actually, So, we have, if you volume grow, then my utilization level will be certainly improve. Second thing, because volume grow with the SME customer also. And what we have also earlier said, my profit with the SME customer is very big or very high in comparison to other corporate customers. That will be also there. Third thing, whenever volume grow, my fixed cost is also not, it is not big one. It's very ideally very lean cost we are running this complete show. And fourth thing, we are also going to add these new products, and they are also in a high margin product actually. So this way, and fifth thing is we have now very systematic process to pass on the diesel hike. That is which we have achieved in the last year also. Sixth thing, we also standardize the renewal, take the hike on the renewal, every renewal actually. That was earlier missing in our company. These, new things happened in company, and that given, fruits to us. Yeah. Yeah, man.
So
I think one important point is that our costs are very low.
Yeah.
Unlike other companies, we are not, quote unquote hi-fi. So that way, we end up, being very pragmatic on costs, and we don't have to show, we don't have to do anything. So, we are there for the long haul. And to be in the long haul, we need to be wary of the costs.
Yes, sir. Just one clarification. So, we have taken price hikes with SME and all those things. So, any chance competition can come in given seeing this kind of high margins in the business? So, any view on the same?
Of course, they would love to come in. They are trying to come in, but the problem is that you need to have the operations, now. So, if somebody on a motorcycle wants to drive at the car speed, he has to buy the car first. He has to learn how to drive the car. Then only will he be able to, race with me, right? So that way, that capability building will take one generation, is what I see for these guys. So I'm okay with that.
So, you are not seeing anyone trying to undercut you given you have taken.
नहीं, undercutting तो ये इसी का ही है unorganized segment.
Yeah, on the
Because
SME
they do all that under invoicing for all the manufacturers and all that, ना. तो जब तक वो नहीं जाएगा इंडिया में कैसे होगा फिर?
So thank you very much. Participant, due to the time constraint, that was the last question. I would now like to hand the conference over to the management for closing comments.
I must thank everybody for attending the TCI Express Q4 con call. I'm delighted with the results that we have posted. We strive to be the leading and the leader in the express industry in the country, just not for now, but for generations to come. Thank you very much.
Yeah, thank you very much to all of you.
Thank you. Participant, on behalf of ICICI Securities, that concludes this conference call. Thank you for joining us, and you may now disconnect your line.
Thank you.